Good afternoon, everybody, and welcome to another edition of ChartWatch Live. My name is Capolingua. I'm from Market Index and Livewire Markets, and it is a pleasure to join you on a Wednesday afternoon to talk markets. Massive jam-packed session as usual. Going to do the portfolio management model. Super interesting time at the moment. If you are managing money in the stock market, that is absolutely essential. And we're not even going to pick a single stock at that stage, but then we will. We're going to get to your requests and we're going to look at your favorite ASX stocks. Use them as case studies to learn how a particular technical analysis model works. And of course, if you're interested in getting access to that model, namely my trend ribbons, hang around to the end and I'll show you how to get hold of those. Now, the trend ribbons, what are they saying? Well, long-term uptrend on the Nasdaq Composite, which is where we like to start. We say, hey, Carl, why do you go to the Nasdaq? Well, it's the risk-on market in the United States. It tends to have a lot of early-stage companies. We know that. Companies that are in high-growth phases, heavily debt-funded. They're really exposed to what the US economy is doing and what US interest rates are doing. So these are the canaries in the mine shaft. If there's something wrong with the US economy, we are going to see it here in the Nasdaq Composite. And ladies and gentlemen, where we're not going to see it, we wouldn't have a darn clue if something's wrong in the US economy if we look at the Dow Jones Industrial Average, which is making record highs, looks fantastic, happy days over here. That's telling us nothing to worry about. But then we get over here to the Nasdaq where we've got companies, now they are potentially subject to the vagaries of the AI revolution and what that means. Bottom line is, I think this is where you want to look in terms of risk on, risk off. And right now, we're hardly risk on. We're hardly making new highs like the Dow Jones Industrial Average. We're not far off, to be fair. A couple of thousand points for the Nasdaq, could do it in 3 or 4 nights. But it's not looking as strong in terms of what the demand side is thinking about the market. That is cash pushing in, buying shares pervasively, compared to the supply of those shares from investors who are trying to manage risk. Are they holding on to that risk? Shares are risk. Are they holding on to the risk, or are they more inclined to get rid of them? We're roughly equilibrium. So there's a balance there. It's not this emphatic vote of confidence at this point in time, but it's also, we're not at that point where we're going to panic. And this is how the portfolio management model works. As I said, it doesn't pick a single stock, but it guides us, or it certainly guides me. You do whatever you want to do. It guides me to how much overall capital I can risk in the market. And I think of my capital like a bucket. I can fill the bucket to a particular level of risk. That is the capital I have, I can allocate into the bucket, and that's going to be active in the market. And what's not in the bucket stays in my cash management account. I can do other stuff with it, but ultimately it's in risk-free assets. How full can my bucket be in the US, ladies and gentlemen, if I was investing in US shares? I'm at 50-50, which is, when you think about it, really conservative by typical fund manager standards, who are they're going to have maybe 10%, cash for your typical balanced fund. Why so conservative? Well, we've got falling peaks and falling troughs. Generally, that means supply is probably growing. Demand is falling back. That's not a good sign. We've got plenty of black candles in there. They tend to speak of pervasive sell orders in the system. The white ones tend to speak of pervasive buy orders. Short-term downtrend ribbon, that's the most obvious one, isn't it? And we tend to find that on the way up, that short-term trend ribbon, it's light green. It tends to support the price on the way up, but on the way down, somehow, I don't know how, ladies and gentlemen, it just does, but isn't it wonderful that it does? And there'll be a few people probably been tuning into my analysis over the last few weeks and starting to look at these ribbons and going, I don't know how they do it either, Carl, but you're right. They just seem to do it. Look at that. Providing that resistance, there's that word resistance, or excess supply when we try to rally and we come down again. Now, what's providing the support beneath that? Well, it's that long-term uptrend ribbon, isn't it? And if you don't believe me, I don't have to prove it to the people who are converted. They know the long-term uptrend ribbon. When we tend to get down there, we tend to bounce off it until we don't. That's not a good thing. That was the last bull market iteration. You can see there, and there you can see there. And then we go to the one before that. Notice on the way down, when we try to rally, the uptrend ribbon tends to hold the price down. You can see here, it starts. Is it? It's starting to support, and we get the trend change. And then when you can see here. Oh, look at this, ladies and gentlemen. I can't make this stuff up. Touch, break. Anyway, the reason why I'm showing you that is, where are we headed to next? I just want you to use your imagination. Picture tells 1,000 words. Could we break through here? Could we then try to test it, fail to get above it? That turns amber. which is a warning signal, and down we go, and we're in a bear market. And in a few years, hey, it'll be a bull market again, and we'll be talking about, remember that bear market of 2026? The great news is you can go out there, you can read the papers, you can go online, you can check what all the journalists are saying, you can read all the research reports in the world you like, ladies and gentlemen, and they're probably not going to tell you what this thing's telling you anyway. Okay, let's head over to the ASX 200. Let's bring it home. When they sneeze over there, we get the cold. But it's not too bad at the moment, is it? We're actually short-term uptrend here. You can see the light green ribbon. That's the great thing about the ribbons. They just tell you very quickly what they're doing. Double greens. Okay, that's not bad. Price action. We've got rising troughs. So demand, for some reason, on the ASX, I wouldn't have a clue, seems to be building. And supply seems to be getting taken out. We've got greater motivation from the demand side than we do from the supply side. Who would have thought it? Okay, now what is happening up here? That's the big question. We know that there was supply here in the past. How do you know there was, well, there's supply everywhere. Remember, I said it last week. There's supply, there's demand. There's supply, demand everywhere. Everywhere there's cash that wants to buy at a particular price, and everywhere there's supply that wants to sell at a particular price, right? But more specifically up here, there was excess supply. How do you know there was excess supply? Well, when there's excess supply of any asset, now that is since the beginning of mankind was started to demand or supply assets, I don't know, beads or wheat or whatever it is. Excess supply means typically the price goes down. Excess demand means typically the price goes up. So we've got these major areas, historically, where there was a substantial amount of excess supply and a substantial amount of excess demand. Now, this is what I find more often than not, capital M, capital O, capital T, capital N, a major area where there was excess supply in the past, there tends to be a pretty good chance there's going to be excess supply there in the future. Not guaranteed, not every time, but more often than not, we tend to find that. And that's exactly what we found this time. So the price you can see on that candle was going up during the day. We found the supply, excess supply. Demand just didn't have enough ammunition, and down we come, and then we kind of spilled out a little bit on that day. We've got three, I'm going to say a little bit nothing candles, but a little bit good as well, trying to poke back up into this range where we know the supply exists. So, you have to give the demand some credit here. It's trying as hard as it darn well can, but the question is, how big is the supply up there? And look, we're going to find out. Big white candles, strong candles closing at their highs, volume coming in will tell us we're eating through that supply. Don't forget, we need to trade with that supply. That supply doesn't believe Aussie stocks should go any higher. Why? Hey, that's up to them. I don't care. I just know they're there. If we can trade with them, they've got shares, they want cash. The demand side, they've got cash, they want shares. Who's going to win the battle? We want to see the demand side give all their cash to the people who have shares, get them out of the market. The great thing is, when you think about it, and this is why breakouts occur, all the people who have shares here, when they get their cash, guess what they've got? They've got cash. They become part of demand. And if the price is going up, they realize, oh my gosh, I can't believe I got out there. I better get back in. The market's going to 10,000. Okay. And then the prices can really move because their demand, their ex-post regret demand combines with the demand that's so clearly in the system, and prices can really move fast from a breakout. We're not there yet. We'll keep an eye. The alternative is, it's white candles, nice volume, cleaning out that supply. The alternative is we get more of these. We know there's supply there. It's clear as day. It's clear as day to us. We know how to read a chart. If you don't know how to read a chart, you're just oblivious. Oh, we don't seem to get through that record high. Okay, this is what's happening. If we see more of this stuff here, okay, that's when we're going to start to get a bit concerned. Okay, particularly if the volume starts to build. So yes, there's cash coming to the market, but there's lots of supply giving them those shares. Something to keep an eye on. What did I mention? I was 50-50 on the Nasdaq. A huge cash allocation there, a bit concerned. Here I'm 2/3 invested. Well, my risk bucket can be, if I want to, if I can find the opportunities, that's where we're going to go next. We'll start looking at individual stocks, finding individual opportunities. But if I wanted to, I could fill that risk bucket up to 67%. It therefore still requires me to have 33% in cash, because is this hardly a glowing endorsement for demand side control? It isn't. I want to be fully invested during these phases here. These are the easy phases. Look, even up to here. And then when it starts to get hard, I'm going to put some money in cash. And for me, that's peace of mind. You do it the way you want to do it. Not for a stock, but I think it's worth addressing. This is from James. James said, Carl, based on my circumstances, I can't be a daily trader, but I can devote time to weekly. Do I need to do anything differently before committing to being a weekly trend follower? This is I always say, anytime I get this question, I say it's the best question. I know I've answered it before, so some of you are going, oh, I know this one. But people are coming on all the time and listening to this message. The only thing, in my opinion, James, that you need to do to go from a daily chart trader to a weekly chart trader is up here, there's a D, and on your platform, no doubt there's a D, there's a W, and then there's an M. Do you know how I know those buttons are there? Because one stands for daily, one stands for weekly, one stands for monthly. And what the weekly does, it takes the 5 daily candles and squeezes them together to give you one candle that represents everything that happened on those 5 weekly trading days. Month jams together the month, and so on and so forth. So when I go to here, the picture does change. I mean, we're getting 5 times more information immediately. And if I'm weekly trader, all I need to do is look at weekly charts. That's it. Everything else I've taught you works just as perfectly on here. Lo and behold, the long-term trend ribbon, which is now 5 times. It's automatically 5 times longer term than it was before. Notice how it also still appears to do its job. Okay, that's my experience as well. It don't matter whether you are on a daily or a weekly chart, the ribbons are going to do their job. Okay, so that's good news as well, right? And you use the candles are still candles. They're still representing the battle between demand and supply. Points of supply, major points of supply are still major points of supply. Major points of demand are still major points of demand. Okay, and here's the thing, here's the kicker. Please, if you're on the weekly chart, don't make the mistake of doing this, because you'll confuse the hell out of yourself. You go, oh, wait a second, the trend is up, the trend is down. Oh, no, no, your trends are your trends, okay? Stick with your trends. Don't muck around with anyone else's trends. Leave them be, okay? Notice how even on the monthly chart, we're still seeing the same traits here, okay? So I'd say don't panic. Check the market once a week. And what's brilliant about this periodicity, and that's what we call these different timeframes, is that you only need to check the market once a week. The market should be closed anytime you check, whether you're on a daily chart or a weekly chart. For me, always check after the candle's completed. And you've got all weekend to do this work. If you're doing it daily, you've got the evening. People say, Carl, I want to be a day trader. I'm gonna be buying and selling by lunchtime, mate. I say, good luck to you. I've been there, I've done that. It didn't end well. Okay, it was a lot of stress, it was a lot of strain, and not a lot of profit, because I tended to ride that emotional roller coaster every 5 minutes, every 5 seconds. I'm checking my stocks, and they're moving, and so's my emotion levels. And we know that when we're emotional, we make terrible decisions about our money. And I was making terrible decisions. I was chasing my losses, cutting my profits too short, all of those silly things that I know you've done. I don't need to, I'm preaching to the converted. But what you find is when you move to that end of day periodicity or that end of week periodicity, you do your work after the market's closed, and you're still going to have losses. You're still going to be emotional, but there's not a lot you can do about it when the market's closed. You have to sleep on it and then still want to do that stupid thing the next day. And generally by then you're over it. You can see what you actually need to do. You're not riding that emotional roller coaster. You're automatically making better decisions about your money. James, hopefully that answered your question. Now let's get to the online request. Just one offline request today. We're going to head over, make sure I've got the daily periodicity, which gets to my next point of, hey, you're seeing my technical model here. It's my view of the world. I use a daily chart. That means I'm in sort of, trades. Look, if they don't go well, they can be days. If they do go well, they should be weeks. And if they go really well, they could be months. Like if I'm following a trend, that's the whole point. I want that thing to go months. Very rarely in practical terms do they go years. So my trades are days, weeks, hopefully months. That means if you go to a weekly chart and you're using my model, what are you going to be? Well, you're going to be weeks, months, and hopefully years, aren't you? And that sort of psychology, I think, suits a lot of people as well. Okay, but what you're going to see here on Wednesdays is my style of trading. Okay, so days, weeks, and hopefully months. You pick the one that's suitable for you. Okay, let's head over to the first request, which is from Doug. And Doug's asking about BHP. What natural, logical place to start, isn't it? We've got a few scratchings on there from the last time we did analysis, so we're going to go delete all studies and we're going to start fresh. It's worth making the point why the trend ribbons are there. And I'll do it for one quick second. Let me go down here and I'm just going to go to the ASX 20. Okay, I've got a watch list here set up, and you can do this on all your trading platforms. And I've got the top 20 stocks in Australia. And the reason why the ribbons are there, it's not to say necessarily, oh, there's an uptrend, there's a downtrend, although that's also what they do. It's for me to very quickly determine what I'm going to shortlist in a scan. So the practical application of what we're doing is you'll create a watch list of the stocks that you're interested in. It could be the ASX 200, the 300, the All Ordinary, it's about 500 stocks. I say make that universe, that's your universe of opportunity as big as possible, because we want as much opportunity. But the bigger the universe, the quicker we need to be with our scanning, otherwise we'll never get it done. And this is where the ribbons are brilliant. So for example, for that, I can see double pink. Now, clearly I can't add risk to it, I can't buy it, but I might want to short that one, okay? And this one's been a short setup for me for a few months now. If you're following my chart watch ASX scans, you know that. It's been on the list for a few months. From about, well, you can see there's turnaround setup. Short, we've done this one before from about, I want to say here actually, early October, from about $65, now it's at $48, okay? So I split it too long. I would just shortlist that for short, and then I'll go tab. Okay, short this for a long. That's it, don't do any more than that. Don't go, oh, but Carl, those last few candles don't look good. I'm not sure about the price. No. We're just shortlisting. We need to get through this list as quickly as possible. Shortlist long. Nothing. Boom. Brambles. Don't care. Doesn't exist to me. CBA looks interesting. I can shortlist it for long, and I spend too long here because in the next stage I'll have a shorter list. I can kick it out. Okay. If I shortlisted it, that's fine. If I didn't shortlist it because I'm not quite sure, that's fine too. If you're not sure, you're not sure. Like, it's not ready. The good news is if CBA picks up and puts in a higher trough and a nice big candle tomorrow, guess what? We're going to do this scan tomorrow. Our job is to do this work in line with our periodicity. So if we're an end of day trader, we must do this same scan every day. That's why we don't need to worry about whether CBA is good or bad today. Because if it's not perfect today, when it is perfect, we must see it. And that's when we're going to trade it. So if you shortlisted that, okay. If you didn't, move on, get on with it. No, we don't need to look at Coles Group. Oh, but Carl, let me tell you how good the fundamentals are for Coles. It's got a great dividend yield and a low PE. I don't care. Move on. Okay, this one, shortlisting for a short. If you don't know what a short trade is, it's not short term. That's a different phrase. It's shorting to take advantage of the falling price. I put it in on this day here. Potentially you could have gone short on that day. So I ran it as a feature chart, highest conviction trade on that day in my lists. And you can see, obviously, it's gone down substantially from there. Fortescue, too hard basket. No, skip. No, skip, too hard. Nope, too hard. Oh, shortlist for a long. No, not interested. Oh, shortlist for a long. No, don't care. Oh, look, quick, shortlist it, move on. Oh, shortlist it, move on. No, don't care, not interested. Oh, that looks interesting. Yeah, shortlist, move on. Shortlist, move on. Oh, I'm at the end of my list. Okay, now I go back through the list and we can get to the point, which is where we were, which is looking at BHP for the first time. So let's pretend we've done that process and we've shortlisted and we've gone through, we've shortlisted again. Now that you have a shorter list, lots of shorts today. Now that you've got a shorter list, you can spend a little bit more time. You might look at the last bit of price action. You might look at the candle that is perfect or less than ideal. And you've got a short list again. And you're going to get to a smaller list as you go, but you're spending a little bit more time, but on a shorter list. Okay, if we spent all the time in the world on the big list, we'd never finish, especially if you want to do lots of stocks. Increase your university of opportunity. This is university of trading right here, ladies and gentlemen. Okay, so we're going to go to BHP. We're going to assume that it was shortlisted. Would it be shortlisted and shortlisted? I don't think so. So the reason why it wouldn't get past my first pass, like it would probably get past the first pass, but it probably wouldn't get past the second pass, is I don't like that candle. And today's candle's live. So I really shouldn't pay any attention to it because it's dynamic. It's going to change. But let's just say, hypothetically speaking, if today's candle closed the way it is right now, all I can see is confirmation that I have up here somewhere, because this is what the shadows do. The shadows point, right, to where there's excess supply or excess demand. Upward pointing shadows are telling you that there's excess supply up there, okay? Beware, be careful, okay? Now, wouldn't it be great if we could have a survey that was compulsory for every investor in the world to fill out their intentions about BHP? It was compulsory. You couldn't take another breath unless you filled out this survey. What do you intend to do with BHP above $54? Okay, and every investor who intends to buy it, ladies and gentlemen, that's what we've got. We've literally got a survey of what everybody wants to do on this stock. How valuable is that? Oh, but Carl, their operations in the last 6 months, mate, they'd shot the lights out. There's copper this, there's copper that, copper. Okay, this is what people are doing about it. They want a supply up there. Why do they want a supply up there? I don't know, I don't care. They just do. Okay, is that excess supply up there going to help me make money if I buy today? Probably not. Okay, but what if we clear that supply? What if we trade up there with a big white candle, nice volume push to tell me we've deleted that supply? Okay, that's when I'm going to start to get interested. Am I seeing that today? No, I'm not. Could I see it tomorrow if it occurs? Yeah, well, that's my job. My job is to check BHP every day. If it happens, I'll be there. Don't worry, I won't miss this thing. I do my work every day. Okay, do I need to do anything about it today? No, I don't. So move on to the next one is the way I would treat this, okay? Now, that's assuming we're hunting. We're in hunting mode. I've got room in my portfolio bucket. I can only go up to 2/3 here, and I'm at 53%. Okay, so I can do a bit of shopping today for the absolute best trades. Is this the best trade? No, it's not. Keep hunting. Okay, let's take it. Let's look at it from a different perspective. Let's say, who asked this question? Doug. Doug asked this question. Let's say Doug owns BHP right now. Okay, and that is the other part of the equation. So we've got hunting mode, which is where we're looking to add risk. But before that, what we really should be doing is, management mode, portfolio management. What positions do I have? What risk do I already have on the table? And do I need to do anything with that? So let's actually go back a step. All right, let's assume we own BHP. We've got three options open to us. We've got three options open to us all the time. We either maintain the risk that we've got, equals R. I'd like to think we'd have opportunities to add risk if we're seeing that perfect setup, okay? Or obviously things aren't working out the way we want and we might need to minus risk. Which one of these scenarios applies to BHP? And it's wonderful to drill everything down to three possible outcomes, okay? Let's do the analysis. Start with trends. What we want to know is the demand side still in control of price? And if it is, we're equals R. If there's strong control exhibited by the demand side, we could be plus R. If the supply side's in control or very close to taking control, we're going to be minus R. It really is that simple. So trends look pretty good to me. Price action, I showed you how to draw these last week. I'm not going to do a tutorial on everything every week. Last week's recording on YouTube is the place to go for the precise definitions on how to draw all of these zigzags, okay? For those that watched last week, if we squint, we've got building demand. Well, I think that's less than a squint. But supply is pretty steady up until that news announcement there, isn't it? That did cause supply, I guess, to fracture a little bit, demand to break through the ranks. But we can see then really all that we got was more supply. Okay, above 52, we just got more supply, and it's kind of following through today. In terms of the price action, I can see a reason why it might just scrunch up a little bit, because we're kind of at 50, it's a big psychological level. And if we went out to the monthly chart, we're going to see we're actually sort of just trading around all-time highs for BHP anyway, okay? And that's the only time I would actually flick between periodicities, not to do analysis, simply to see where a major historical point of supply is from the past. So it makes sense to me that we do have a bit of scrunch around 50, because it's an area where long-term investors are going to go, well, actually, this is a pretty good place for me to get out. I didn't get out there last time. Let me de-risk. They might not sell all their shares. If they have literally a portfolio manager, you got 500,000 shares of BHP, you might sell 50,000 shares of BHP, just on the basis that you're just managing a little bit of risk at a risky level. Okay, you can always buy them back if you need to. Anyway, you get this little bit of an influx of supply that was clearly hitting a bunch of demand. Okay, we know funds have been rotating into resources for about 6 months. So we get that scrunching up of price action. So when I see the scrunching up of price action at a level which makes a lot of sense, I don't mind so much. But otherwise, if there's no reason for it to be occurring, we know we've got a preference for this, right? We want strong motive phases, FOMO, powered by FOMO, people can't get enough, shallow pullbacks, supported by buy the dip, okay? This is less of a consensus. This is less emphatic. Okay, so that's kind of what we got. So we've got to just, going through our various checklists here of trends, price action. And for me, the final flourish is my candles. I've got a few black candles in there, which does speak to some distribution, some supply in and around a very logical level. We've obviously got that candle there, which does speak to some pesky supply. But at the same time, there's still demand working in the system. We have, I guess, not an emphatic consensus that BHP is a great place to be, but, like a begrudging consensus. And on that basis, if I had it, and there's nothing so sinister in that candle by itself, looks not ideal. I'm talking about this one here. This is not perfect. I mean, if you've been watching these videos for a while, at some point we're going to get to a case study where we're going -R, don't like that candle, red flag, got to take some risk off the table. And there's a little bit of discretion. Hopefully you agree that most of my model is explicit. Basically, you can't argue. It's black and white like the candles. But you also will understand there's a little bit of judgment calls that need to be made based upon some candles and how significant they are. You've got support here, and you don't have to use, I've designed an OTR, which I think is better than the ATR, but you can use ATR 1 period here, long-term moving average on that. We know that's above average volatility, right? We know there's above average volume. So this candle, yes, it's not a great candle, but it's being elevated in importance by these two indicators down here, which you can put on your chart, right? This is just regular volume, run at long-term moving average over it. So whilst I said, well, this in and of itself isn't a reason to do anything, now that I'm looking at this and looking at this, it is getting my attention. So I still wouldn't have done anything today based upon yesterday's candle, but can you see how today's candle is therefore elevated in importance? I want to see the demand side kick back today. I want to see the demand side say, we're not worried about new highs in BHP. Like we still think there's more to go. Rather than the supply side saying, hey, new highs on BHP, yep, let me out, right? Because we know what BHP does. Correct me if I'm wrong, BHP goes from 50 to 40 to 50 to 40 to 50 to 40 to 50 to 40 to 50 to 40. So there's got to be some element of the market that's going to make that bet, right? And if the demand side doesn't believe that, if they know, no, we're going 50, 60 this time, they'll be there to keep the price up. Are they there to keep the price up? Or are they kind of going, yeah, you guys, yeah, we know the drill. Yeah, okay, 50, let's go to 40. Look, we can't, it's not, the case is not closed yet. It's not definitive. But today's candle is not ideal. If I got a candle, and I think I said this at the start of this analysis, if I got a candle today that looked like yesterday's one, for me, yeah, this is blasphemy. But remember, I'm a trader. I'm a hunter. I don't care about BHP's dividend yield. I couldn't care less. If we saw a candle like yesterday, and this is a huge if, because of yesterday's importance, yeah, look, I'd be inclined to go -R. But what does that mean? Well, we kind of say, we always use hypothetical 1,000 shares. Let's say I had 1,000 shares of BHP. You've got whatever you've got. I don't know. Something like that, look, I like to move in 300 lots, right? But it's not that bad. I might do 200. It's making your action match what's happening on the chart. Whereas what we normally do is, I'm in, I'm out, I'm in, I'm out. Why? Why do you do that? Like, did you get the all-time definitive sell signal that you have to be out forever? Or the buy signal? Like, why are you doing that? Ask yourself that question. Why are you doing that? And you might go, actually, he's right. There's no bloody reason why I'm doing what I'm doing. I just do it. Okay, I'm just trying to match up what you do with a reason for doing it, ladies and gentlemen. That's what we do on Wednesdays at lunchtime. Okay, what am I? Well, I've told you I'm equals R for now and -R if that candle starts to look really bad because of what happened yesterday. I think was the shortened version of what we started with. Okay, let's get to the next one. And we do it and we move on and we live our lives quite happily, ladies and gentlemen, when you come around to my way of thinking. Simon's got ORE, which is Orezone. Was looking good until ... Now, what I love about this, and give me a thumbs up emoji if you have, I know I have to zoom out, but give me a thumbs up emoji if you already know exactly what you need to do on this stock. Like, give me a thumbs up. Okay, there's a few there. I'd like to see more. Like, how good's that? I don't even, like, Carl, you don't even need to, I already know what I need to do on this stock. Compare that to 99.9% of the population. Okay, so clearly, and this is all navel gazing, it's hindsight, but hopefully you agree that I've taught you how to do this. We know that that's not great, that's shadow. Remember what we said the shadow's point, and it's not just on BHP, it'll do it on everything, excess supply. How do you know there's excess supply up here? It started to kick in on that day. Just started to kick on that day. It got a bit more serious on that day, and it got quite desperate on that day, didn't it? Like here, the demand side's still probing. The demand side, here we go. The supply side, we know is, well, no, you're not. No, you're not. And then the demand side ran out of ammunition, right? So demand side still got plenty of ammunition, and this day it's just like, no, sorry, that's all we got. And the supply side said, well, I've still got more to sell. And then you always get, oh, isn't Orezone cheap now? Buy the pullback, buy the dip. Boom, boom. We've still got more supply. Okay, we've still got more supply than you have demand. So we know that obviously the shadows are pointing excess supply, but what we have created here, what the market created, was a point of supply, a pretty substantial one in terms of the candles. If I go down to the volatility, you can see, what's an average candle? Yep, and you notice I use so few indicators, don't I? RSI, where's your RSI, Carl? Where's your MACD? Where's your stochastics? Where's your Bollinger Bands? I don't use them because they don't tell me they don't tell me anything about demand and supply. Everything on my screen tells me stuff about demand and supply. What does the RSI tell me about demand and supply, ladies and gentlemen? Nothing. It's a mathematical calculation on the prices. There's nothing. It's irrelevant. It's meaningless. What does a candle tell me about demand and supply? Holy moly. What didn't it tell me? But is it an important candle? Well, how can I tell? Well, I need some context. That's what this is about. This is context. Yeah, this is a big candle. This is a big candle. This is a big candle. Now, we don't have a lot of candles here because Orezone only started back there, right? But still, for what it's worth, it's a big candle. Was there big volume? No, actually, no, on those days. Interesting, it was going up with everybody wanting to own it, and actually there actually wasn't that much supply on these days. Carl, how do you know there wasn't that much supply on these days? Well, the volume was only about average, and these days it wasn't very much. So what we're seeing here is highly motivated demand, to some extent kind of flaming out, and then there wasn't a lot of supply, but the supply that did want to get out got out pretty big time. Even on this day, like this is a weird chart for me. Don't get me wrong, this is a weird chart. Demand, is it fair to say, look at the volume, it's minuscule. Is it fair to say demand just evaporated? Look at that. Like demand on this day completely evaporated. And there wasn't a lot of supply around. There weren't a lot of sellers out there saying, well, it's not like that people were desperate. But the ones that were there weren't mucking around with the price that they were getting out. So if somebody told you, hey, demand for this company is completely evaporated, what would you think about that? And we know that obviously because of the candle price, demand has evaporated, sellers have become more motivated. Well, that can't be good. And now we get the washout, right? So supply is motivated, but it's increased demand's trying to come in to buy the dip, and they're getting beaten back. Here, demand coming in, clearing out supply. That's a good sign. Don't get me wrong. That's a good candle. That's a good candle too. But when we start to reinforce these points of supply, that's when we go, it's a big no-no. Okay, what would we have done? Now, this again is hindsight. All I can do is associate a picture with an action. And I don't know if you know how a lot of AI was trained in the old days. We had humans looking at pictures and circling things for the AI, to train the AI. So we had humans, hundreds and hundreds of humans, looking at hundreds and hundreds of images of a stop sign. And they would literally trace out, this is true, go Google it, trace out the stop sign on those pictures. And the AI would then associate, not the picture, the AI doesn't see pictures, it sees pixels, sees ones and zeros. It would associate the ones and zeros of that shape with a stop sign, so that when you're driving your Tesla, it sees a stop sign, it needs to stop. So what I'm doing is much the same. I'm tracing out a picture here, all right? And I'm trying to teach your brain to associate that picture with minus R. That's all I'm trying to do, okay? Because my brain associates that with minus R. So, Carl, big deal, mate. Okay, that's the picture for then. I want you to see the next picture in real time and go, yep, I know exactly what I need to do. I've seen that one 1,000 times before. Okay, so you can say, oh, Carl, you're clever in hindsight, mate. Or you can say, look, that's not what this is about. This is about trying to associate this picture with this action, okay? This. Okay, now the next minus R, for me, the way my brain works is when it sees this picture here, after that picture there, I've only got one option open to me, no other options. Now, the next picture I want you to take note of is this one here, okay? And unlike a stop sign is a stop sign, it just is, all right? I've labelled that wrong. With my stuff, there's a reason for it, okay? This is where the demand kicked back in. A decent whack of demand, yes or no? Look at the candle, motivated. Number one, how many of them were there? Substantial, above average. Demand kicked back in here. People said, this is a point of value. This is where I want to buy this stock. Is it coincidence that it happened almost exactly at my short-term uptrend ribbon? Yes, it is pure coincidence, okay? But because it happens so often at those ribbons, the great news is I can use them in my model. So if buyers are here, they're buying, they're buying, they're buying, what does it mean if we close beneath that point of demand? What does it mean about the demand that was in the system? It means that the supply consumed them. Those buyers don't have cash to buy anymore. Guess what they've got? Oh, hopefully, boop, just clicked. And you just went, when you use a bad word here, you just went, oh shit, he's right. All that demand down there, all that cash has now got shares. That means they're supply. These guys are now supply. Holy moly, that's not good. And the price is going down. And down here, they're beneath their break-even point. They're not going to want to hang on. They're going to want to get the hell out. And if it starts to rally back up, they're going to realize the tightest. They're going to want to get the hell out of this at every next opportunity. And if I'm right, we're going to see stuff like this. We're going to see stuff like this. If I'm right. If I'm wrong, something else will happen, right? So for me, when we crack through the point of demand, again, tracing out a picture, is it fair to say these are just pictures, right? These are just pictures that I'm teaching you to associate with an action. Close beneath point of demand, I must reduce my risk. I've got no choice. It's no, but it's a good company. These guys, they've got that bit of dirt next to those other guys who have that bit of dirt. And in that other dirt, there's like the most amazing stuff in that dirt you can't believe. So their dirt, I reckon, is pretty good. And I no doubt there's going to be something in, like, who cares? There are other minus R's after that, as you can see, which gets us to today. What do we do? Is this a picture of plus R? Is this a picture of equals R? Or is this a picture of minus R? And I don't even need to say the next bit. But Carl, let me tell you about Orezone. I don't care. Okay, thank you, Simon. Hey, don't not put your stock in because you know it looks bad and Carl's going to go, I don't care, okay? Put it in anyway, we might learn something. There might be a picture, and this is the most important thing I'm going to say to you today about why you should still put your crappy stock in, right? That Carl's going to hate. There could be a picture in there that I need to circle, like a stop sign, and teach you what to look out for next time. Because if we look at only the best charts, we're not going to see those pictures, are we? So it is important that we all get together in these sessions and we actually find the crappier stocks to go, there's that's a different type of stop sign. All right, let's keep moving. BRE, Brazilian rare earths, zoom out. And I might have made this mistake before where I'm very naughty. I should have zoomed out. We must zoom out to a default zoom before we do analysis so that the trend ribbons are all relatively the right angles. I mean, you can make a trend ribbon flatter by zooming. What am I doing? Zooming, I can do it this way. Zooming in, you make the trend ribbons flatter, right? Zooming out, naturally it becomes steeper. So how steep do you want to go? How flat do you want to go? So the default zoom for me is 180 bars, which on a daily chart is about 6 months, if I'm not mistaken, give or take. So ordinarily in our scanning, remember how we started this discussion 41 minutes ago, in our scanning process, we wouldn't spend more than a moment on this, right? So we can rule out plus R straight away. If we were in the portfolio management, so hunting stage, boom, this one's gone. Isn't that brilliant? We don't even need to look at BRE. In the portfolio management stage though, while we have it, we must look at it every day. Now, you know me, I wouldn't own this stock. There's no way I could own this stock because it's not doing enough of the stuff I like to do. I would have happily owned it right on this day. Here, he's still owning, happy owning. Bit concerned, but not doing anything yet. Still not happy about that. In fact, all here is still fine until we get to where? Let's just go lower POS. I won't draw the O. And now we've got a problem, right? Supply's potentially building. So what? Is it building enough to warrant a minus R. I'll leave that up to you. But certainly when we get here, there's absolutely, the technical term is no darn way could I still have FRP after that candle, right? FRP stands for full risk position. So our full risk position in these sessions, we're saying is our hypothetical template 1,000 shares. So 1,000 shares after that candle, and I'll let you decide, how much. We're moving forward on this. We're going to do other stuff. We've done this, but no darn way. Like, it's impossible. So we know that we can't. We know that I wouldn't be in this to do portfolio management, is the point I'm making. Plus R equals R minus R. Is there enough signs, plural, in this chart that the demand side is in strong control of this price? Is there enough signs in the chart that the demand side is grappling control away from the supply side? Or is it really supply and demand are actually quite equal? The number of investors who own this stock, so they own the stock, they rode it all the way up. How do you think they're feeling right now? Are they thinking, oh, geez, man, I should have got out at $6. I knew that was the top. I knew I should have sold on that day. Don't worry, it'll get back up there. Or are they thinking, actually, the run on this might be done? But at the same time, there's a demand side going, this is starting to look cheap now. It has pulled back. It's a 50% Fibonacci retracement. Remember, don't forget Fibonacci, very important. People love their Fibonaccios. Fibonacci, of course, is Fibonacci's Mexican cousin. Did you know Fibonacci had a Mexican cousin? And Fibonacci, of course, discovered that amazing number ratio. But Fibonacci, very little known fact, discovered the ratio between corn chips and tomato salsa, 1.618, which forever became known as the Fibonacci ratio. My point is, I don't use that either, right? Nor Gann, nor Elliott Wave, or any of those silly things. Demand and supply, equal. Do I have any interest? No, let's move on. Doesn't mean you can't ask about it. That's Priya. Priya, I'll only do one because we're a bit late. I want to keep going. Peter, that's a lot of words in your question. Hang around after the session. I know people listening to the recording go, hey man, my recording ended. I didn't get it after the session. I know for people who tune in, we end the recording and we do talk about some of these questions with lots of words. We'll do that today, Peter. We'll do that afterwards. Let's go for CAR. CAR. Which is, again, another wonderful one to talk about. I won't bore you with all the details about when the model called it a short. There. Look, I just did bore you with the details. And, I can do stuff like, if you don't believe me, and you're all I know I'm preaching to the converted, but we type in CAR here, and you see that this thing, it did a 35, that's the longs. That's when it was going long. So it went long at 35 and stopped going long at 41. And then let's see, I don't know what's going there, -2. Let's see where it started going short. It started going short at 36 and still short today, effectively, right? So a lot of people have been emailing in, where do you get this list? This list is a spreadsheet I use offline to keep track. It's not online yet. I am talking with market index developers, product team to get it put online, and then we'll have it available to you. So effectively, what I want that to be for you is a way to answer your questions as to, well, how does the model work? So you can go back and look at your favorite stocks and go, where did the model start to hate my stock? Okay, whatever date it was, $36. And I didn't show the dates, but it's irrelevant. I know I'm preaching the converted, but we can see, Carl's model started to hate this stock. It would have been that day there. But you know how the model works now, right? You know the picture. Okay, bottom line is we've got three options. And I've heard all sorts of talk, because I do read the same things you guys do. That's my job at Market Index. I love my job, don't get me wrong. I get to write about markets. And my writing is a bit different from most. I write about what I'm passionate about, and I get paid to do it. And that's pretty neat. And I get to do these. So we've got our three options, but I've heard a lot of market commentators saying that this is your option. Like, this is the unequivocal, hands down option right now, because for stocks like Car Group and Seek and REA and Pro Medicus, they are, this term, oversold. They are undervalued, okay, and they are more likely, therefore, to go up. That's not how my model works, and I totally respect their views because they would have done some analysis. I haven't done any analysis, ladies and gentlemen, so don't believe anything I have to say. Like, did I analyse all the fundamentals of these companies? No, couldn't care less. And they have. I'm just juxtaposing. I just looked at a chart, so don't believe me at all, I guess, is probably the message. But I'd also put to you that many of them had buys through here, and they're just actually telling you to buy the stocks that they already own. I can't buy this. You know why. So that's out of the question. That's out of the question. And I've only got one option available to me, ladies and gentlemen, and that is that one there. Hey, they could be right. Yep, this could be the very bottom of car sales for the rest of mankind, rest of the history of mankind. And they would be right and I would be wrong. But here's the thing, I'm going to jump on their bandwagon pretty soon because at some stage that trend's going to turn up, that's going to neutralise, the price action's going to start to do this, the candles are going to all turn white. And they may well have been buying at 25, and by the time it gets to 30 or 31, when it does all of those things that I'm buying, they're a few bucks ahead. But I tell you what, they just didn't buy there. They bought it there. So, you know, like, who's done the right thing there? Anyway, thank you for that one, Mike. But it does also allow me to make, and let's do the tour to tech, the tour to tech rec. And we can expand it to something like this. And I'm not going to go into the individual charts. You can see we've done lots of analysis on these. But you tell me, are we plus R's on these? And I don't hate these stocks. Carl, you hate those stocks. I don't care about those stocks. I just can't see that the market wants to own them enough yet. So it's still a no for me on that one. We saw REA. Seek is another one. Seek was super interesting yesterday. I thought Seek was fascinating yesterday. Did you see Seek yesterday? They came out, and this is the best bit. This is the best bit. Okay, so Seek came out yesterday, and I only know this because I saw it on the 6 o'clock news. You know, whatever expert got up there on the 6 o'clock news, and they said this. They said Seek reassured investors that AI would be complementary to their business, right? Because they're getting belted because people think somebody's going to develop another Seek. And I can tell you right now from speaking to the market index developers, they're doing stuff you can't believe now at an enterprise level. And it is possible that some companies may in-house their own, and this is not somebody developing a competitor to Seek. Don't worry about that. There's not going to be Seek 2 popping up. But enterprises, businesses that hire, have development teams. Like Market Index Livewire have a massive development team. They are creating in-house enterprise level software for themselves right now using AI that diminishes the need to go to third-party providers. So they no longer have to pay Seek or Xero or whoever. Like, imagine how much money you're paying your developers, and they can knock this stuff up really quick. Imagine not having to go to those third-party providers. And that is really the essence of what the problem is. It's not so much, somebody's going to build another Seek or Salesforce or these sorts of things. It's that, no, companies will just build it themselves because they can knock it up now. It's not weeks, it's not days, but probably months. And then for years, forever, save themselves money. Now, if I've got that wrong and there's somebody out there in that world that wants to tell me I'm wrong, please do. I'm always happy to listen. I don't care on this one. I find this stuff fascinating, okay? Not that it changes the way I want to trade these things. It's irrelevant. But it was so funny to hear the management come up and say, no, not us. Not us. No, AI's got to complement our business. And at the beginning of the day, the stock actually rallied on that affirmation, right? Confirmation, whatever you want to call it. The belief that AI, and then what happened by the end of the day? What did the big fund managers say? They said, no, I think it will. Yeah, I think it will have some impact on you. And then look at today. We are getting a little bit off topic. Tim's got, that's a lot of words there, Tim, but there is a stock in there. Let's just do your stock, GDG. Oh, look, another one that has, it's a turnaround setup for taking risk off the table, but bouncing back. And to its credit, we are seeing some demand come into the system, excess demand, and that's wonderful. I hope nothing more than this one does this, Tim. I hope it does this, okay? I hope these start to flatten out. Get my arrows, where's my arrows? Hope these start to flatten out, right? But but I just can't see. It's too early for me. It's too risky for me. Oh, but Carl, Generation 2, they're not risky. They're blue chip. Mate, look at the chart. That is a big ball of risk because I'm risking doing the opposite to what the big fund managers are doing. So I can't do that. So look, for me, could I get to equals R even? No, I'm not there yet because all I've got is 3 white candles. I don't have confirmation. This is why we want rising troughs, rising points of demand, to say that demand is building in the system. It's gone from increasing supply and demand running the hell away to increasing demand and supply actually hanging on, saying, no, actually, I better not sell. So this is still too early for me. So look, I can't even get to equals R. I'm still a minus R on that one. Let's go. I'm going to scroll down to the bottom. I'm going to do 5 more, ladies and gentlemen. And then we'll adjourn for the day. So NIC is the first of the 5. We didn't do any big thematics today, did we? Like, I don't even know what I'm going to call today's video. What will I call it? Send me some suggestions. It was, I like to do rare earths, lithium, get some clicks. But I think today was just learning how to trade, isn't it? Learning how to manage risk more than anything else. Okay, Nickel Industries. This would be shortlisted in that first pass. No doubt about it. This is what the trend ribbons do. Quick, boom, double greens, shortlist. Then with our smaller list, we'd come back and we'd start to do some more detailed analysis. So we'd look at our price action, drawing out peaks and troughs. And actually, we've got, I think, a pretty decent motive phase there, fairly shallow pullback phase. So a bit of nothing goes up in a straight line. There's going to be profit taking. Why was there profit taking right at that level, ladies? Can you see where I'm putting? Well, why was there profit taking right at that level? Oh, because that's where it became overvalued, Carl. It became overbought on that day. What's overbought? When you go down, I was going to say, look, you go down to Woolies, you pay $9.99 a kilo for a tomato. Can a tomato be overbought? I guess it can if there's no tomatoes left, but maybe there was, maybe they just didn't have any tomatoes. Like, what is overbought? What is oversold? What a silly thing to say about stuff. What we can say is, there were investors who got the hell out last time. There were probably a few that didn't. And down here, they're going, oh, why didn't I get the hell out? Tell you what, not this little black duck. If NIC ever gets back over $1, I'm out of there. Guess what? They did. But how many of those little black ducks were bailing out compared to demand? Fund manager positional, nickel's rallied, Nickel Industries is undervalued. There was some fundamental news, not that I care, right? Closing of a particular mine in Indonesia, right? And yes, there is very naturally supply at this level, but look what kicked back in. Today's candle isn't good enough for me. And I know it's open, I know it's live, but it's a good start. That upper shadow is bothering me because what is that upper shadow pointing to? It's pointing to a zone that we know, like we already know there's excess supply up there, right? And when do we want to be involved? Do we want to be involved before that excess supply is consumed? Putting that excess supply back into cash. That's what we want, that supply out of their shares and into cash with the other buyers, pushing our shares up. So we're not there yet. So very close, certainly would be on my watch list. I'd want to come back and check it the next day. And all I'm waiting for here, so if we go, let's go 3 options because we must get to this point on every stock that we ever look at, equals R or minus R. And we can go tick on this one. Is a tick? Can I do a tick? Oh, I think I can do a tick. Watch this. Tick. Hello, clever. This one is cross. So no, today is nothing that even for me resembles, and I've drawn that picture for you, that stop sign for you. So no, that's not it. And the only question we have is about plus R. And all I'm waiting for here, right? You know what I'm waiting for, right? You know the candle I want to see. Plus R, next, demand side, candle. Okay, I've just given you another acronym. I know Carl's got all these acronyms trying to understand what they are. Next, demand side candle. So if I see a demand, I taught you what a demand side candle is, white bodied or long lower shadow, but the important thing is the close near the high. If I see that, I can go plus R. That's it. So that's a conditional plus R. Okay, 4 to go. Let's go to Peter, who's got KCN. Gary, I can see your question. It is a brilliant question. It's about stop losses. Do I use stop losses? And you will be shocked at the answer. We'll talk about that after the recording's finished in a few minutes. I said 4 more. KCN, you can see I'm getting tired. I'm sure you're getting tired too. Kingsgate, we've got some serious problems here. It's your homework. It's a case study as to where it started to flag that something wasn't right. Okay, not that I would have got on that day, I wouldn't have, but I knew something wasn't right on that day. I knew something wasn't right on that day. I knew something was very wrong on that day, and I knew we were in big trouble on this day. All right. Has it done enough? That's ancient history. Has it done enough to warrant adding some risk back in? And I actually think it's not far away. It's not quite there. I tell you what, I'm closer to adding risk on this one than I am on PME, REA, CAR, SEK, right? Because they're train wrecks. This one, at least it still has, it's got half the stuff I need. It's got a long-term uptrend. It's got rising peaks and rising troughs. None of those had it. It's got a predominance of white candles since that low. But it also has now an MPOS. You've got to go back to last week's video. I'm not going to do MPOS again, but people who were there last week know what that means. So there's a lot of latent supply that we need to deal with. So we want to be pretty damn confident that there's enough demand coming back in to fight that battle. Because ultimately we are going to have to fight a battle here. There's no doubt about it. It will, I shouldn't say it won't. It's silly for me to say it won't sail through there. Of course it could. But this is where MOTN and the power of MOTN comes into it, ladies and gentlemen. More often than not, it's not going to sail through there. We know that, right? So I have to understand that if I'm getting in, I need a pretty damn good signal. I'm not sure we've got that yet. But the other thing I need to consider is that if I'm getting in around here, and let's say we know that we don't like stuff closing beneath points of demand, I'm going to start to take some risk off the table. So that's helping me define my risk. And I have to understand that my reward could be capped there. And I don't want to get into a trade where I'm potentially risking more than I stand to make. So this is we haven't even talked about this concept of my model, because we kind of get to the end of the hour, don't we? And we kind of, we just don't get around to it. But we need to understand also what our potential reward to risk is, and ensuring that we're taking trades that stand to deliver us more than what we could risk. So look, the good news is, and again, we go to our spectrum here, equals R, what do we have? Plus R, equals R, and minus R. And we'll do the ticks again. I think we can see that this one is across. All right. That's very clever. And this one is a tick. So that's good news, because we weren't sure about equals R on many of them, but at least we can be equals R here. But I don't think we're not here yet, are we? And I won't do the whole thing. I'll just, well, maybe the whole thing's quicker. We're not here yet. Okay. What do we need? Big white candle closing above that point of supply. Ideally, even I see that the short-term trend ribbon is now beginning to behave like it should, like a zone of dynamic demand, because at the moment it's kind of looking a bit like a zone of dynamic supply. But everything else is actually still looking pretty good. So equals R. Where does it stop being equals R? Where does it get back to a minus R? You know the answer to this. I don't want to see it go beneath that point of demand. Okay, I've got 3 more to go. Let's go to PLS. Well, there you go. PLS, that's a good one. Pretty similar, actually, pretty similar. So I'm ZRP. You know that already. We've done the analysis to say that don't have any risk on Pilbara Minerals. You know that, and you can go check again, Chart Watch. It was around here. In fact, I think it was that candle there that started to add risk to it. So for me, that phase is complete. Okay, in around 220, out around 460. And I honestly couldn't care less where it goes from here until it starts to do the stuff I need. And we actually did this analysis previously. So there's no new developments here apart from what I said I wanted to see last time. It doesn't have to be that big, but at least give me some rising peaks and rising troughs, get me back above the short-term trend ribbon, give me some nice white candles closing on their highs, because much like the last one, we do have some good stuff in place. Could I be equals R here? If I squint, yes, well, but obviously on ZRP, but if I still had it, could I be equals R? I could, but look, there are some levels very close by, which is comforting too. Like, I don't have to give back too much. If we're close beneath those, then I'm taking risk off the table again. Okay, 2 more if I'm not mistaken. Santos. Is Santos a sell? Well, it's definitely for me. I can't tell you what to do, and this one is for Claudette. I can never tell you what to do, Claudette, because we don't have our financial services license doesn't allow it. But I can teach you what you might want to do based upon this model. And the model doesn't like this one very much. But I do remember putting it in as a plus R here because at that stage it was a turnaround setup. So this is one, and more often than not, I feel, and hopefully you agree, my model actually does pretty well. But there's a subsection that's not more often than not where it doesn't. And this is an excellent example of where I felt demand was coming back in. And it was pretty convincing, wasn't it? I mean, big rally through here, shallow pullback, long-term trend ribbon no longer behaving as a supply zone, starting to support. And then we got this candle. I mean, what an emphatic showing that was there. Above average volume could have been better, indicating a bit more supply removal, but certainly for me, sufficient to add some risk. Now, as you know, in our 1,000 template, you know I never go plus 1,000. So for me, this would have been a plus 300. And if I saw another signal, I'd get to 600, then to 1,000, and I could keep going, right? I take a bite. So in this case, no, for me, this trade is over. Now, unfortunately, I'm back to ZRP. That one didn't work out. It's frustrating, okay? Carl, why such a small little risk amount? Because Santos isn't the only trade I'm going to do. I'm not building a portfolio of 5 or 6 stocks that I'm betting are going to be the best for the rest of mankind that I'm going to hold on to, and you'll have to pry them out of my cold, dead hands. That's the buy, hold, hope, and pray approach. No, I buy lots of stocks. I just want to get the best setups on the day, and I add a bit of risk to them. I don't need to buy all of Santos all at once. I just know that if it comes up again, I'll add some more risk. But there's other stuff. I could have 30, 40, 50, 60. If a full risk bucket, I could have lots of little bits of risk working to fill my risk bucket. I don't peg it all on just a few blue chips. 2 or 1 to go, PLY. We'll do this one and we'll end it. Not terrible. So let's go Zoom. Normal. You can do it any way you want. You don't have to do it my way. Look, it's very flat. That's the only thing. It's very flat for me. Could I get to equals R? Oh, no, it's not even an equals R for me because I'm a hunter. I'm hunting for strong demand side control, and this is not it, but it's not terrible. I guess if I can't equals R, then I must be minus R. I'm not far away from an equals R or plus R. Just give me one decent candle is all I need. In fact, it's a little bit more than that because I want to see that candle, and you know what I want to see. In addition to this, right? I want to see some interest. I just think the market has lost interest in this thing. So what does interest look like? It looks like a big vertical blue bar down here in volume. There's something going on and people are warming to that fact. So nice white candle, closing at the high, substantial volume push, and then I can become involved in it. It'll go back to a plus R for me, but it's not there yet. But an interesting little picture to paint for you as well, for you to consider. Let us leave it there. And if you'd like access to my trend ribbons, you can do so. I'm only sharing them on TradingView for now because it's a portal where it's easy for me to click access on and off. And I just want people to use them and hopefully it helps you. So I need your TradingView username. Please don't send me your first name and your last name with a space in between because that's not your TradingView username. I can't do anything with that. And invalid requests will delete after a week. So TradingView username, and always put your name to that request. I don't know if it's a compulsory field, but put your name. Let me know who you are, because if I get XXX or whatever it is, I don't grant those because out of respect, I think you could let me know who you are. If you are watching on the recording, be sure to hit the subscribe button. We've had lots and lots, hundreds of people subscribing. Keep doing that because you want to know when I start my Chart Watch Market series again of videos, and that's when we're going to start to look at like silver, gold, copper, iron ore, all of those sort of big commodity themes as well. So definitely hit subscribe. If you like this video, hit the thumbs up button. That really does help us get our message out there as well. Of course, in terms of getting our message out, tell your friends. You must know some people who are investing in shares who this sort of information may well help them. Apart from that, ladies and gentlemen, it has been an absolute pleasure chatting with you today. Hopefully you enjoyed it. And as always, all the best for your trading and investing until we catch up again. Bye-bye for now.